Investors and traders, welcome to the channel Market Chart Pattern. Today is 28th of April 2025. Hope everyone is having a fantastic day. First of all, apologies. I wasn't able to do the weekend review for the stock indices. So we'll try to cover some of that here, but it will be a little bit of a shorter video. So we'll not be able to do the sectors, but for the sectors, I think I'll try to do something perhaps tomorrow. As always, the video is for educational purposes only. It's not a financial advice. So let's start by taking a look at the dollar index. So here we go. So this is the US dollar daily chart. And today we can see that the weakness is coming back into the US dollar. And we have also seen the stock indices, the major averages. Some of them actually outperform, but a lot of them actually were pretty much unchanged. So we'll take a look at that a little bit later. And what I also want to show is let's move to the weekly chart. Here we go. So last week we had a bit of buying coming into the market, and of course it's going to be the month end, so we'll have to deal with the month end flows as well. Just reiterating, the 99 to 98 level in the dollar index is really key. If the market breaks below the 98 level on a closing basis, then there's a lot of weakness coming into the US dollar, and it could accelerate to the downside. And of course we have this big black ABCD around 94. So last week it did look like maybe the market is trying to strengthen a little bit. We are dealing with a lot of month-end flows, so this week we are going to see quite a bit of fluctuation in the exchange rates. Now let's move over to the interest rates market. So we'll start by taking a look at the shorter end of the curve. Here we go. So this is what we were talking about in the previous video, that it does look like the yields want to move lower, and we are perhaps in this ABCD one-to-one price projection lower, but could eventually see the yields fall to as low as 3% on the 2-year Treasury note. And today we had quite a big move on the 2-year Treasury note. The yields were down by minus 1.78%. It's a pretty big move, and it has of course taken the swing point of 21st of April out to the downside on a closing basis. I think we are going first to challenge these lows around 3.45%, and then we are looking at about 3% and possibly even to 2.95%. With that, once we get there, we'll have a very interesting pattern formation that will take place, because that will be a 3 drives to a bottom pattern, and here I would imagine would actually result in a pretty large rally, which could in fact see the yields get back to around 3.5% by the looks of it. But of course it will actually break this support structure, so I would imagine that the yields will remain in this kind of a range between 3.5% on the 2-year Treasury note, with the possibility of yields even moving lower. So this is an indication that perhaps, quite contrary to what we might see in the mainstream media, it does look like the Fed will be moving with their interest rate cuts. Perhaps not in the next meeting, but the meeting after that, and they slated 2 interest rate cuts in 2025. But if we are able to get below this swing low, I think the chances will increase 3 to 4 interest rate cuts, or perhaps a larger cut to start with. And usually in the previous scenarios, whenever there has been a start to an interest rate cut cycle, especially on the basis of weakening economic conditions, the Federal Reserve, they have actually started with an aggressive move of even if they, let's say in a first cut they do quarter basis points, then they have actually gone and done half 0.5% or 50 basis points cut. So they actually begin to move aggressively. So that could actually be possibility, and if that happens, that could actually send a little bit of mixed signals to the market as well for stocks or the risky assets. But that's something far away, not right now, so we'll talk about that later on. Let's take a look at the TNX. This is the 10-year treasury note, and here the yields are actually also moving lower today, and we saw the yields being minus 1.17%. So my assumption is that actually we are in this red ABCD, and we could see the yields fall as low as 3.68% or 3.7%. Now the key will be actually this right here, 3.88%, because that's our swing point. Once you are able to get through that, 3.7%, getting as low as 3.6%, and we have been there before, but then we had a nice spike up in the yields, and now we are kind of going and testing the lower end of the range one more time after completing this pattern. Now if we were to take a look at this on the futures, so 10-year treasury note, this is on the futures, so we see the price on the y-axis, and we can see that it appears to be moving after getting out of this congestion pattern. Today it cleared these highs quite nicely, getting towards 112 and 11 seconds. That's going to be its shorter term target we could look at. Then of course the ABCD could, in fact, we could go as high as 116. It's also setting up this higher bottoms right here. So this market is moving technically. By technically I mean is following our ratios and patterns quite nicely. We saw a big move to the downside after it hit the 78.6% retracement, and it's also been a 3 drives to a top pattern. Let me try to show this like this, and we get to, so you can see that 1.618 came in right here, and then we had the 1.618 right here as well, and we have seen a pretty nice move to the downside after hitting the 78.6% retracement. And then if we take a look at this on the 10-year, the long bond futures, so this is the 30-year duration long bond, and what we are seeing is further more, this is of course longer duration, so it's weaker in comparison to 10-year treasury note. We are also seeing a ABCD pattern right here. Here we go. So I think it's got a chance to get up to this 116.29. That's where it's likely to find a good resistance. So let me actually highlight this like this in this pattern formation right here. Here we go. There we go. So 116.29, 116.30, good resistance level. If it's able to clear this, that's gonna be really nice. Actually, I've drawn it wrong. My apologies. It's already above this. That's gonna be 50% of this. There we go. So yeah, I mean, it's ABCD 50%, between 38.2% and 50%. For stronger trending markets, getting above this market is also getting stronger. In other words, yields moving lower. Now let's take a look at the Bitcoin. There's a video due on this on the Lucas timing cycles, the timing spiral. If you remember the last video I'd done, I mentioned the month of March being a really important month, and what we have seen is early April, or even on pretty much in the month of the bottom of the low that we saw in the month of March. April was not able to go below that on closing basis, or even if it did a little bit, we saw a rally resume. So I would imagine, I think this around the 72,000, we have hit a pretty important level, and we have seen a nice rally in Bitcoin, and I think the Bitcoin has got further upside. to go. So, looking at perhaps these tops right here. So a video due for Bitcoin, so I'll do that later on during the week. Just preoccupied with a few things which I need to get out of the way. Okay, and now let's take a look at some of the international markets. So we'll start by taking a look at the Bombay Stock Exchange. This is Sensex. Really nice pattern formation right here. We saw a very nice rally, then a double top. So this market has been in a bear market, and the bear market in the Sensex started in September. So slightly different to the US market because of the elections, in my opinion. And then it did a really nice pattern formation, double top, tried to close below 38.2% retracement, and then a nice rally higher. So here the scenario is that it's above the 38.2% retracement. It's broken this symmetry pattern. So of course this entire decline, this first decline, is complete. Now the chances could be, if this is the A, B, we could be in C, and then there could be a D to follow, or whether it is over. So this is the question that we have to answer right now. I think it's a little bit early to say, because if the market begins to turn, like it's going to take the 25th of April lows out to the downside, the chances are still in a corrective move, and this move could market could retrace quite a bit in this to end a corrective move. So it could be A, B, and point C. Possibly that remains a possibility in the Sensex index. Now, if we take a look at the HSI, and here we can see that it found great deal of resistance right there, and then we have seen a bit of a rally, but it also seems to be at this level. It seems to be just not going much anywhere. So let me draw the retracement level right here. So it's right at the 50%, between 50% 61.8%, but it looks like a weak rally here. So I think it's dealing with some good resistance level. It's interesting because in 2025, this market was one of the best performing markets. So was German DAX, and now quite a bit of it has moved to the downside. But we have seen appreciation in some of the U.S. markets. This is the flow of the money. It's moving out of the U.S. stocks, went into other markets, including the Asian markets, the European markets, and maybe some of that is being repatriated back into the U.S. stock indices. So, really interesting how this whole cash flow works. A very quick look at the German DAX. Here we go. So German DAX has had a very nice rally, and it's rallied 78.6% retracement right to the tick, and it has closed lower. So the chances are we are going to see a pretty nice pullback in the German market of at least this much, or possibly even greater than this. So could it be a corrective pattern still? That remains a possibility. So here we go. There's a bit of an ABCD. Yeah, I think that actually points to much higher. Not sure if it's able to get there because 78.6% is finding resistance from here. Now let's take a look at the UK market. In my opinion, it's completed as ABCD, and I think for FTSE we are looking at I think it's quite ready to move lower, and we could see, there we go, move as low as 81.70. Now let's take a look at the US market. So the US market found a great deal of support right here. This is the S&P 500 cash index on the daily chart. This pattern ABCD moved right to this about 50% retracement right now. It's in this region where we can find a good amount of resistance, and the market was pretty much unchanged today. So we have a lot of data coming out this week, inflation related data as well. So the market is actually likely to remain kind of in a range bound formation because the data, waiting for the data, and also some of the earnings coming out from some heavyweights in the tech sectors. So that could be one of the reasons, but again, it's right into this resistance zone. And then if we take a look at the NDX, you can see that it is right at this 50% retracement of this entire move down. Also completed this nice ABCD, which we have discussed before this pattern. And right here, it's just, consolidating right here. If the market begins to close below the lows of today, 28th of April, I think it's got a further chance where it could come down and perhaps fill in this gap, so that we could see a bit of a pullback happen as well. And that remains a possibility. Right now, I'm looking at this 7th of April low as a really key low, as we have discussed before. And the market could remain range bound, come back and try to test the 78.6% of this leg as well. That remains a possibility, close this gap. But as long as the 7th of April lows are held, I think we are moving to the upside. So this is what we are watching in the key markets in the US and also some of the global markets. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.